We are live. This is the market update. I'm your host, Bill Noble. Do you need to know what to do? Do you have no idea why banks are failing? I'll tell you. I will tell you. I've got the charts. And if you want to get involved in the crypto markets, we're going to come up with the levels that are going to be important. Bitcoin, Ethereum, and altcoins, which, by the way, as of March 10th, midday, are actually up at the moment. Is this what Satoshi dreamed about? If there was a repeat of 2008, would Bitcoin be there? Well, Bitcoin is here this time, and we're going to talk all about it, which is why the title of the stream is it time to panic, or should you panic? Not yet. Should you panic or shouldn't you? I argue you shouldn't, and I'm going to tell you why. So let's welcome who's on the stream here, right? Huckleberry Native, Steve J, what's up? Chris, SEO, AZ, Don't Ask 6 from Oklahoma. K-Real says he's not worried. Robin says, oh, I need this. Welcome to SPA Market Update, right? Raj, Tito, K-Real, Thomas, SFG, what's up? Right? Sarah, Daniel, right? Downey, home of the Carpenters. Ben B from Tampa, welcome. PK with Notorious Love. Kenneth on Saturday afternoon, welcome. Crypto Crazy. Sarah has 10% down, day drinking, up 10 drinks, so I'm even. All right. I will get everybody straightened out here as best I can. Driftless King, welcome. Nico F, Dry Powder, yes. Somebody was like laughing me off the air again. Somebody was like giving me a hard time that Bill Bear was not to his liking. I mean, it's like every time these guys come in and make fun of me, sell, all right? Now that everybody is like, oh my God, now the big question is, where do you buy? Where do you buy? This is Satoshi's vision, right? Banks failing. I mean, how is the Fed going to hike rates ongoing when you've got the Federal Reserve Bank of San Francisco going, ruh-roh. We got 3 or 4 banks failing. Yeah, I don't think we need higher rates. I think we need QE. Seriously, not NFA. Okay. Robert's here. Buy Bark, says Robert. Okay. I am a very big fan of gold at these levels. We'll go into it. Laughing Dolphin from the UK. Belgium is here. Welcome. Okay. Welcome. All right. Please, I hope this is not a bear trap. I actually think that's exactly what this is. First, they had a bear trap in bonds. Today, they're going to sell equities. They're going to freak out about banks. I get it. Okay. But the dollar is going lower. The Fed is done. Bonds have bottomed. And the question is, where do you buy gold and where do you buy crypto? Not investment advice. That's what I'm doing, right? It's like massively going to pile into gold, hodl what I have. And then I got to start figuring out, like, what are the levels for Bitcoin and Ethereum? We're going to go through all that. Okay. Okay. Long Bitcoin, short the banks. FDIC shutters Silicon Valley Bank, appoints receiver. So we have no idea what these guys had on their balance sheet. We have no idea who's not getting their money back. Most likely, they're going to wind up having to sell S&P in order to hedge themselves. Like, once these banks start failing, we don't know what the contagion effect is on the bigger banks. We don't. Okay. Right. Wall Street Journal, First Republic, and Signature Bank, okay, are also on the hot seat. So KBW is the regional bank index. We will probably take a look at that in live TA. Now, in terms of news, like I said, Silicon Valley Bank, largest bank failure since 2008. Rumor has it they were lending money to startups with the collateral being stock from an IPO that never happened. Whoops. California regulators had to get involved. Investors dump U.S. bank shares amid fears over the value of bond portfolios. Okay, so when you have defaults, when you have banks fail, okay, the debt that that bank was issuing also goes to zero, right? If they issued short-term debt instruments and money market funds bought those debt instruments go to zero. Or if they issue junk bonds, somebody is holding the bonds and they're not getting paid back. So if you're wondering how this leads to freakouts where one bank fails and then another bank fails and then another bank fails, that's how it all works. Who owns the debt of these banks? Again, this is why Satoshi wrote the white paper in the wake of the last time this happened. Now, over to crypto. 6 possible reasons why Bitcoin crashed below 20K. Silvergate, Silicon Valley Bank, Biden proposed tax changes, right? Which he will never, ever, ever get through Congress. Matter of fact, they're not going to get anything through Congress. There may be a government shutdown and say goodbye to the dollar. More on that later. Gensler continues to pressure, even though the SEC got their ass kicked in court. The Fed will likely hike 50 basis points. Funny. U.S. government sells Bitcoin on Coinbase. Not funny. Voyager may be doing forced selling, and the government may be trying to get out. Who knows? And of course, we forgot that the Attorney General, right, of New York City or of state of New York, so a guy with a, B average in law school, writes a brief and says Ethereum's a security, makes some stuff up and sues KuCoin. Lawyers can file all the lawsuits they want. Good luck proving this in court, especially when the CFTC says Ethereum is going to be regulated as a security. Now, the point of this is they have thrown everything at this market, everything at this crypto market. Now, could there be forced selling? Yes. Could somebody have had their clients' money in, say, Silvergate, and they have to sell their assets in order to make good? Yes. Could Voyager Binance merger result in puking of assets to raise capital? Sure. But they threw all of that at the market, and let's check where it is as of 119 on March 10th, right? You can tell I went through 2008 because you have to timestamp every price check. So ETH right now at 1412, okay? And Bitcoin at 19,900. We'll go into more on that later. So they threw the kitchen sink at the market, and it's still hanging out near the 2017 highs, 1420 and 20K. I think that's interesting. Yellen warns lawmakers default will produce financial collapse. Okay, that's not the Silvergate default or any other default in a regional bank. It's the government default. In other words, in markets, everyone's like, oh, this is the headline. This bank's going to fail. Okay, maybe, right? I mean, obviously, there's so many moving parts here. But the one thing I am confident on is that everyone's doing the wrong trade. Everyone misses the big trade because they're this close to, oh my God, the Attorney General sued Ethereum's a security. No, that's not the trade. Congressman warns digital dollar could expand financial control over Americans. There's a reason why the Biden administration just decided to come after crypto, right? And it really doesn't matter what administration it is. It's pretty obvious that no government wants you to be free. The reason to listen to this show, the reason to subscribe to this channel, the reason to hit the like button is because you got to have 2 things to be free. Capital to put in crypto and your sanity. You got to have both. Biden proposes 30% tax on crypto mining electricity usage. Wow. Are we taxing electricity usage for Tesla? I don't know. You know what I'm saying? It's like, wait a minute. The people being free is all of a sudden a problem. It makes me want to be free even more. U.S. Justice Department appeals New York's judge decision to approve Voyager's sale to Binance. So crypto is trying to find a market clearing price for assets, and lawyers for the government continue to fight it at every step of the way. You want to know what's really funny? And not that many people are saying it, which is why I'm saying it. The government's got bigger problems than picking on crypto. And I think next week and next month, that is going to become very, very apparent. Very apparent. In other words, Janet has got the right idea here. Everyone's trading regional bank failures. I think we should be trading government failures. And I can't wait to see what Jerome says. Because check this out, people. Let's go back to this. Let's go back to this comedy, right? The 50 basis point rate hike. If the Fed breaks the system, they will not be able to do what they did in 2020 and 2008. They will not be able to print their way out of the crisis. Now, they may have to do some QE, but they can't print $6 trillion in 1 month because inflation has not gone away. But you've got enough layoffs and enough problems so that the Fed is going to have to say, yo, we got to back off this right now. In other words, you want to hear something insane? How about the Fed does a total pause next meeting, or they have to do an emergency rate cut? Can you imagine? That's why the dollar was down yesterday. That's why the dollar is down today, because people should be flocking to the dollar as a safe haven, and they're not. Right? And gold is up, and so are gold mining stocks. Now, crypto is down because there's forced selling everywhere. I get it. But people are doing the wrong trade. Somewhere in here next week, there is going to be an opportunity in crypto. Now, was it 1900? Is it 19K? Or is it 14K? I put the 14K video out there. You can check out that DeMark work. It's on the channel. Okay. So if everyone panics, it's 14K. We've got some astrology work that we've done about the eclipse. Okay. You could have a dollar panic. That's what I think is going to happen. You could have a financial panic because you've had them historically. That seems to be happening. You could have a crypto panic. No shit, right? Of course we could. But the idea of a financial panic that leads to a dollar panic is woven throughout the history of these hybrid eclipses that will show up in April. Also, the world is replete like 87 and 94 with rate hike cycles that broke the economy. 87's rate hike cycle broke the stock market in October to the point where despair got to extreme levels. And then there was also 1994, that when the Fed was actually done hiking rates, risk assets screamed higher. People are looking at these bank failures like a repeat of 2008. And I guess if it is, it is. And it's all going lower. I mean, you don't necessarily need me to tell you that. You needed me 5 days ago or 2 weeks ago when I was telling you to lighten up on risk assets. That's when you needed me. Now, we got to sit and we got to wait and we got to think about what the best trade to do going forward. Fed to create a new group to talk about stablecoins. Well, the Fed better create a group to figure out about regional banks. But if anybody's going to do stablecoins, it should be the Fed, not the SEC. A stablecoin is a sort of representation of the dollar, and the Fed and the Treasury are responsible for the integrity of the dollar. So it's not Gensler. Matter of fact, Gensler is a joke because you know what? Regulators missed this blow up in the banks. They missed FTX, and they've obviously missed the regional bank blow up. They missed it twice. And they're trying to sue crypto out of existence? I mean, can these people do anything right? Anything. CoinTracker integrates with H&R Block. Please do your crypto taxes. There's a link down below to Pro Bitcoin Solutions, $20 per chain, and they give you a CSV file and a report that you can use to file yourself. Okay, now over to my Twitter. Just a little TA here. First of all, here's my guy DC before the payroll number saying the Challenger Gray 6-month average of year-over-year job cuts. So he's not looking month over month. He's going back and seeing the job cuts exploding, right? The pink line exploding to great financial crisis levels, right? So the job market already looks like it's in 2008, and everyone knows it but the Fed. Or at least they're going to have to admit it very soon. Very soon. My reaction to this was DXY at 80. DXY at 80. Now, speaking of TA, I have to update the chart, but I do think it's somewhat interesting that on a Gantt chart that I published a couple weeks ago was talking about if 1525 gave out, the next support was at 1350, which is kind of where they puked ETH to this morning. Could be 1300, could be 1325. You know, I don't doubt that there could be a major heave on Monday. A lot of times when banks or places are going out of business, they announce it after the close on Friday. We'll talk about this, but you know what? 1350? I mean, if ETH is not going to make a new low, if Bitcoin is not going to make a new low, right? That's an assumption. Don't know if it's a good one or not. 1350 and 19K could be support. I'll show you the charts. Okay, so that's the news. Now, I can definitely see that chat flying, right? Daniel J is here. Huckleberry Native. Okay, Spin is making fun of Janet Yellen. Okay, Mr. Moby Dick is here. Language Trainer, welcome. Right? Baby Whale is number 59 on the like button. People, hit it. Greetings from Holland. Hello. Aiken with the notorious love. Crypto at 2 a.m. is here. Giving me some love for some outside the box analysis. Pancakes and Peanut Butter says, what's the dollar panic? Let's talk about that. Let's talk about that. Let's talk about that. All right. Somebody thinks that they're late. No, they are definitely not. Wait, mindset is late. No, you're not. You're not too early. You're not too late. You are right on time. And yes, I was making fun of, oh, Silvergate is winding down operations. People, when banks fail, they fail, and it's not pretty. It's not pretty. So somebody has lost money here and probably somebody big. The question is, does this create forced selling, forced hedging? Does it trap retail investors in equities? Does it create panic in crypto? And is this not Satoshi's vision? Hence the new backdrop, right? We got the backdrop that matches the thumbnails. This is the time to stay calm. I was panicking a week ago. Now it's like, okay. Let's see what they do. All right, let's go to PowerPoint because I know you want the charts, and more charts. Probably going to have to do this whole thing by live TA, but I might as well get through this part of the presentation. Okay. Pro Bitcoin Solutions / Noble. Link down below. Do your taxes. Do them with these guys. Help support the channel. Okay. S&P futures. To make a long story short, when banks fail, okay, the bonds that those banks have issued wind up on someone's balance sheet. they lose money, they panic, they have to hedge, or they sell S&P. Or everybody who owns bank stocks panics and they just sell S&P because S&P futures are mega liquid, supposedly. Okay. So everyone is panicking. Like we had this nice short squeeze, which I knew was bunk, right to resistance. And then boom, it's down only. 38.20 is the level I'm looking at in S&P if they panic. That's where I'm looking for support. Okay. I think the low for the year is going to get made in March. I know that sounds crazy. I know all these banks are failing and maybe it's the end of the world. But I still think this is a massive panic downtrade. And if the Fed has to come in and the Treasury has to come in and put $5 billion on everybody's balance sheet like they did in 2008, that's what they're going to do. They're not going to let every single regional bank fail. And then there's no way they're going to do that. And the Fed's going to hike rates at the same time. So yes, equities can go lower, but retail is levered short. And retail is never right in equities. Retail was long and had no idea what was going on in 2008. The institutions didn't fully understand it. Yes, we knew mortgage-backed securities were going to zero. Yes, we knew banks were going to fail, but we did not know that after Lehman went bankrupt, that the market was going to go down 40%. We did not know that. Maybe it was going to go down 20%, but not what it did. So everybody's watched the Big Short movie and now retail knows better. No, I don't think so. I don't think so. I think you should be searching for a place to get involved. Now, bonds. Classic case where I screwed up here. Basically, I'm assuming that this box was a double top. And when bonds broke out of the bottom, the way you were going to get the selling climax in crypto was because interest rates were going to rise. Market gets everybody sucked in. Then it comes back into the formation, creating a false breakdown. So if you have a box like this, when you do a false breakdown out of the bottom end of the range, you're going to turn around and take out the top end. So you're saying, yeah, bonds could take out the recent high, which is going to cause long-term interest rates to fall. In other words, people start flooding into treasuries, although, I don't know how much wisdom there is in that, but treasuries are certainly better than junk bonds or junk bond funds that hold bank debt. Now, again, lower interest rates, lower dollar, higher gold. It's pretty simple. And there's historical precedent with that, with the eclipse. We could be looking at the start of a major downtrend in the dollar. Just because the Fed can't hike rates anymore. I mean, if I'm wrong on that, then, well, F me. I mean, seriously. We're going to go to 6% Fed funds with half the banks in California failing? I don't think so. I don't think so. And this could create a massive opportunity once the forced selling is done in crypto. Now, here's the dollar, right? Dollar was down yesterday. It hit resistance. 106 was a good ceiling. Inflation numbers coming out next week. I don't know. Those numbers would have to be absolutely horrible for the Fed to be able to justify what they're doing. And you know what? If those numbers are not horrible, the dollar's going down. Like, that's my high conviction trade. Same for DC. I know that's what he's thinking. He's been waiting for this for a long time, right? This is a BS correction to weed out short sellers in the dollar, and this thing is going to just smoke lower. Gold, right? I work for Emerging Asset Group. We have a token, GLDN, that helps you earn packs for holding it. Okay, that token, like many tokens, has taken it on the chin, right? Because gold has come off because of fate rate hike hysteria, which I have questioned now for a while. How far can these guys really go? Gold runs the stops multiple times below the 38% retracement and then turns around and goes up. Okay, so this is a bottom in gold And I think this Williams oscillator coming near zero is telling you that something very big is about to happen in gold on the upside. It could be epic. It could be straight through 2,000 off this inflation number. Because again, modest, 5-6% inflation with the Fed unable to tighten, it doesn't get any better for gold. GDX. So if equities don't fall apart, or if they do and come back, large cap gold mining stocks could be a good play, right? GDXJ. So back to GDX, you had this huge low, this new low in price, and a higher low in stochastics. If this thing reverses itself, this thing could go up a lot, which sort of confirms, even if you're not into GDX, confirms what can happen in gold. Okay, GLDN, never talk about it. It's basically been down only. Okay, it's paid to look at it when it goes below the bottom Bollinger Band, right? This is technically interesting now because people gave up on this from 57 cents down to 40. Right? Now, if gold doesn't go up, okay. But if gold starts going up, that whole complex connected to it could do better. Now, let's talk about Bitcoin. Okay? By the way, I own GLDN for the disclaimer. Bitcoin has support at the 62% retracement of this move up. Now, let's talk about this. So, if Bitcoin holds 19.6, you have a DeMark 9 bottom here, which means one of two things. Either that's it, like it was here, and then you get a move up, or it's going to go up for one day, and then you're going to have, 2 down weeks. You're going to have a calamity. Okay, I'm kind of hoping 62% holds. And here's why. It's not a bull market until you can buy a dip and make money. Everybody who bought Bitcoin above 20K just got stopped out, basically, right? Now, could it go down here? Could it make a new low to 14K? Yeah, it could, especially if there's forced selling out there that I can't see. But raising capital up here so you can deploy it at 19 or 14 sets you up for Satoshi's vision. Let me say that again. The ability to deploy capital in Bitcoin at 19, 16, or 14 lets you participate in Satoshi's vision because the Bitcoin white paper was written after this event that we're witnessing now happened the last time. Okay? And the big trade is not regional banks. It's the solvency of Uncle Sam himself. So is the Federal Reserve going to put Uncle Sam out of business? Is this the time to give up on alternative currencies because the Attorney General of New York doesn't like Ethereum or wants to get his name in the paper? Right? It's time to think about where to get long. Now, an example from equity market history about how you can get shaken out and distracted in bull markets. Now, one case is that the S&P makes a new low. I got a video out about Bitcoin at 14K. We'll go over some of that, but I wanted to show you this first. This is 2011. This is a 25% correction in stocks. This was really ugly. This is about Portugal, Italy, Greece, and Spain and their ability to pay their bills or not. Now, in this case, the ECB came in and saved everybody, but everybody was selling stocks, including me, and people weren't focused on the fact that you have bought Facebook, Apple, Amazon, Netflix, Google, and Microsoft. Down here, you had life-changing money in 2021. Like you were done, especially if you had any leverage on the position. Even if you did, you were set in 10 years. To me, this, where you have straight up washout, looks just like this straight up washout. This is what bull markets do. Remember these speeches from like 2 weeks ago, 3 weeks ago? Bull markets are not like, oh, wow, cool, it's going up. No, they rock you. They shake people out. Now, again, if it makes a new low, if it's the end of the bear market, we'll go through that. But bull markets can shake you out, and finding the place to put capital is what I want to do here. 1386 in ETH, 62% retracement. Okay, now here is your 5-wave ugly, right? So this is the all-time high. Wave 1 down to 36, bounce up to 42, go all the way down to 15 on FTX. That's 3. The 4-wave goes up to 25, and then potentially the 5-wave is a new low. So I guess if it is 2008 again and this whole market's going to get nuked, that's what's going to happen. Do I believe that's the best scenario to think about? Honestly, no. Because this weekend, everybody will be like, well, it's going to 10K. Now, it may, but nobody is going to want to put money into the market now. Yesterday, you could have made money selling the dollar and buying gold. And Bitcoin is down, but it's down 2%. Right? Equities are having a tougher time, and certainly bank stocks are doing worse than crypto. Now, as a reminder, you've got 3 astrological events in play. The middle one, the full moon in March on years ending in 3. So 83 was a bond debacle. 93 was a currency crisis in India. 2003, March, was the start of the U.S. invasion of Iraq, which Putin celebrated by launching cruise missiles at civilian infrastructure in Ukraine. Nice, huh? And then in 2013, you had a government shutdown. So the full moon thing is working because obviously we've had quite the crisis over the last 3 days. Now, the eclipse from April 20th. Let's remember, many of those occurrences going back to the first one in 1812 or 1816 had to do with a dollar problem. That was a dollar crisis after the War of 1812. There were tightening moves in here, some of them involving gold. There was a copper scandal. There was a drawdown in silver reserves. All of these things led to a financial panic, which we're probably having now. I don't know if we're having a great financial crisis, but we're definitely having some kind of panic. We have them in crypto. It seems like we have them every week or every month or every quarter. But how do you trade a panic? Well, I think it's dollar down, gold up, and grab crypto when it's impossible to grab crypto. That's either 19 or 14. Okay, so that is the PowerPoint version of the market update. Now we get to see how much the market has changed since I started talking, which is the interesting part of doing these type of streams when the market is nuclear. Okay, so let me get set up and go back and start with stocks. Okay, Daniel J paid his taxes. Okay, we have Marco from Estonia in the house. Welcome. Okay, welcome. All right, King is looking at Cardano. Okay, so let's do SPY first. And see if there's anything bullish going on here. So there's nothing bullish going on here. This looks like a head and shoulders breakdown in stocks. So that's not good. Okay, now in SPY on the 4-hour chart, you've got a 13 bottom and you've got a big stop loss point at 384. So you're headed for a 13 and a 9 on the 4-hour chart, and you've got the market.
I'll share screen. I'll share screen.
All right, let's start SPY all over again. So you have a 13 bottom.
Start from the one before, since you weren't sharing screen from the other one.
I didn't share screen on the PowerPoint.
Or the last one
okay,
before
got
the
it,
SPY.
got it.
For this.
Okay, so SPY on the daily chart, not good, right? There's like no sign of any DeMark bottom of any kind. Let me make sure the D wave is on here. Okay. All right. Now, there's no good news on the sequential front However, on the D wave front, this could be a simple A, B, C correction. Interesting, right? A, B, those C legs I've talked about, they can be brutal. Now, there's nothing going on in the daily chart, so I'm not going to be in denial about that. But if you go to the 4-hour chart, very interesting that you've got a 13 bottom and it hit the DeMark stop loss point at 384. And there's support underneath that at 379. So everybody is hysterically bearish S&P because they think it's the return of 2008. And you know what? I don't think it is. And even if it is, the Fed's done tightening. They're done. Like, this is like lost on everyone today. They are so done. They're going to hike rates with banks failing? Oh, well, I guess if they do that and the whole world gets nuked, well, all right. That's the market update, right? There's no way. And retail is short equities looking for more downside, and I don't think they're going to get it. Now, let's go to crypto, because I know y'all are chomping at the bit for some like on-demand TA. So we were talking Solana earlier. Okay. Solana hits the 62% retracement of most of its rally at $16. That to me is very interesting. Let's put up Cardano to see where that is. Okay, let's draw retracements on this. So Cardano, 62% is 31 cents. So the 62% retracement is going to be key for any crypto, right? If it goes up, you want to wait to see if it comes back and holds 62%. Because if it does, it's good. And if it doesn't, it's not. Or it's not good until it comes back above. So there's your 13 bottom in Cardano. Whoops. There's your 13 bottom in Cardano, and there's the blow-off bottom point at 29. Now, this DeMark count is not very exciting. You could have like 4 more crappy down days, or maybe 1 big thrust down in Cardano. I got to be honest with you. Like, look at this. Like, where was Cardano right before FTX blew up? Right? It's right here. Okay. So it's like starting over. Like, this was overly bearish and this was probably overly bullish. And now here we sit at 30 cents. Could this make a new low and go down to 24? Yeah, but why would it? I mean, you're going to wait. I mean, if something happens over the weekend and equities blow up, or Voyager has to puke $500 million in ETH or whatever, okay. I don't know what forced selling is still out there, because there could also be forced selling in legacy. But the more forced selling there is in legacy, the greater the likelihood that the Fed is done and so's the dollar. I have a new annoying thing. Like, my old annoying thing was raise capital. And now my new annoying thing is put the capital back in, not investment advice, right? To try to take advantage of this dollar move, right? Even if that's, even if there's some insane wick down. Okay. Algorand down only, it's a 9 bottom. So we'll know if there's a rally back up. If that rally fails, beware the failed rally. Like where all these 9 bottoms are, right? Let's try a 90-minute chart. Okay. So I think what I would say about Algorand is it went way past where we thought it could go. Support was at 19 cents, but I do think it's very interesting that whatever happened this morning in Algorand could have been a 5 wave down. In other words, This could have been just a simple, humongous correction. Now, could it go all the way back down to 16 cents? Yes, right? I remember being at BitBoy's book tour, and I was massively jealous of AJ because he said he bought Algorand at 16 cents, right? And obviously it was a great trade, but I'm like, wow, you know, you can get Algorand at 16 cents. And I'm not sure why the future of the internet should disappear just because the government fudded crypto as much as you can FUD crypto. I mean, where are you going to get crypto FUD next week? Like, you know, unless there's like some forced selling out there that we don't know about. But this to me looks like there could be at least one big retracement rally, because you'll know, as I said, when the forced selling is over, right? Like this goes, you know, up only, down only. That type of price action can breed itself. So if Bitcoin doesn't go to a new low and the dollar starts tanking, these altcoins look interesting to me. Okay. Avalanche. Okay. Now, Avalanche, the good news is they have a 9 and a 13 bottom. The bad news is it's below 1520, which was the 62% retracement. If this is a stop fishing exercise and this reversal gets follow through, any green candle that you see, you need follow through. For example, you see this green candle here, looks good, right? Wrong. Red candle, no follow through, boom, goes lower, right? This green candle starts to get follow through and you get more of a rally. You need follow through on reversals. Okay, I did not do Hedera yet. I'm doing Polkadot right now. Okay, so you've got a nice candle on Polkadot's daily chart, but not nice DeMark work. Okay. Okay. So you have a 4-hour chart of Polkadot, which is worth going over. Okay. So the way this worked in Polkadot is Polkadot, the DeMark system is saying that today's low was a 5 wave with a 0, which is a strong signal that the downtrend would be over in the opinion of the DeMark D-wave indicator. This is very, very interesting to me. Very. Right. In other words, the last thing anyone's talking about doing right now is buying altcoins. So it would be funny if they all reversed. It would be. Right. 523. No, 555. 555 in Polkadot is a key level. Okay, let's try a 90-minute chart to see what we got there. Okay, 559 is a level it's got to get through, right? Like this was clearly the DeMark support. Now it's the resistance. So Polkadot has got to get follow through. QNT. Okay, QNT, major support at 107. Okay, basically 2 major reversal candles showing people really wanted it on that support point. With a 13 bottom, QNT looks pretty good. Okay. Okay, H bar, if I'm looking at the right symbol, let's do the fib work on this. This was a massive moonshot. So somewhere around 6 cents even was the 62% retracement. They're doing stops below that. this daily DeMark work is not great. Some of these altcoins look all right. Some of them don't. Okay. There's support down here at 0.055, but they're selling the rallies still. So this does not look as good as some of the bigger coins. Okay. MATIC, coin that I really have no problem hating. Okay. So don't want to hate it too much because you have the 13 bottom and then this big reversal. Okay. And you've got the 9 bottom. So if MATIC takes out $1.05, my price target, I think in some video was $1.05. 86 cents was possible. Looks like the low was like what, 94? Pretty close, right? If you look at this, they did a really good job of running the stops. Okay, so MATIC retraced 50% of the way back of its entire up move, and there's a DeMark 9 bottom. So, if MATIC takes out, $1.06, you can stop hating it. I would actually like to stop hating it. I think this profit taking in this layer 2 trade that everybody was all euphoric about could be coming to an end. If it isn't, this is going a lot lower, a lot lower. Okay, so here's IOTA. Okay, so some of these altcoins, there's the 9 bottom that's not working, right? Technically, the lows are around 16, 17 cents. I don't see a ton of support. I just see the fact that people may not want to sell it down here because it's too close to the lows. Let me see if I can get this coin up. Okay, let's try Tezos. Okay, so 9 bottom on the daily chart. Trying to hold the 62% retracement. I'm telling you, that's going to be the key level, right? In all these cryptos, if the 62% retracement holds, then maybe next week we can hang out base and then turn this thing around once the Fed gets its real wake-up call. If not, you wake up Monday morning and this whole thing is going to be lower. So let's just go back and check where we are from a live TA point of view. Okay, so this is the 89-minute chart of equities. Okay, so here is what could be a beautiful thing for crypto. Okay, a little bit bizarre on how this handled the hidden pivot bottom, but you had a new low in price and a higher low in the RSI. So unless, some gigantic debacle awaits, you also have to remember, this is from 2008 as well, that there were calamities and bankruptcies over weekends, and there were, Fed officials or the Treasury going, calm down, we're going to sort this out, right? Joe Biden cannot be at the helm while this whole thing melts down. It can't happen. Not to mention the fact that the Russians could take advantage of a situation like this. So there's like national security reasons why that whatever this regional bank contagion is has to somehow be contained. And that's got to mean the Fed's going to chill out. Or so we hope. Okay, so for the send-off, okay, 89-minute Bitcoin and Ethereum. Actually, let's go back to DeMark. No, actually, you know what? You're right. Let's do 89-minute because, that's what's hot to the minute now. So over the weekend, right, I think you want to see 1440. You want to see all this price action invalidated in ETH. That's what I think is going to be important. In other words, it has to be revealed that all of this was panic selling. Okay, someone asking about NEAR. Actually did this on another show today. Okay, so the bad news is NEAR is through its 62% retracement at $1.86. The good news is there's a 9 bottom. Okay, so that could be interesting for NEAR. Also of interest, okay, this potentially is a 2-wave, meaning this was the first leg up. This is the second wave. This is the correction. And there could be a 3rd wave up. Like I haven't seen this in many places in the market. This is one of the places that I'm seeing it. Let me see if I see it in Bitcoin. So I don't see it in ETH, but I do see it in NEAR, which I think is interesting because if this actually holds and this 9 bottom actually works, the joke I like to make about NEAR, I mean, if this isn't the bigger the base, the higher in the space, then what is it? And I guess if it makes a new low, well, then it's going to make a new low. This is why I wanted you to have capital available. Because the second time you have a 2008, first of all, they're not going to let it go to the extent that they did before. And even if they do let it go, they absolutely cannot tighten. So when everyone's talking about regional banks, you got to think about the dollar, the budget, right? You got to think about this, right? The issue is the solvency of the government. That's the issue. And is the Federal Reserve going to put a dagger in its own government and a dagger in all of its regional banks? I mean, all these employees are going to get laid off. All the banks that have exposure to these banks, in other words, if they bought debt issued by these banks, they've lost money. They're going to lay people off. So now you've got Silicon Valley carnage and Wall Street carnage. Huckleberry Native, what are we doing this weekend? I'm going to try to go to South by Southwest, right? Somebody with fire with the thumbs up. Appreciate that. Oh, Brian's looking for GALA. Don't want to leave anybody hanging. Okay, so GALA looks pretty good. There's a 13 bottom and a 9 bottom. Just like the 13 bottom and the 9 bottom down here. Okay, 62%, 0.034. I think if I was hodling GALA, not investment advice, but this actually looks okay to me and well supported. Well, it's refreshing to see an altcoin look like this, but it's still below 62%. And again, a possible stop fishing exercise. Baby Whale says, I do not believe Bitcoin is going below 17K. Me either. I mean, 14K is possible. We talked about this. Okay, so again, Bitcoin on a 90-minute chart may not be as relevant this weekend, but I do like the way this DeMark quantitative stochastic is flashing green down here. And I also like this DeMark 5-wave action where, you know, the DeMark Elliott wave system, right, for Bitcoin on a 90-minute chart is telling you that's a 5-wave down and that's the end of this move. That's what that means. Right? And that same signal is on the 4-hour chart. Okay. Now you don't have the perfect sequential bottom yet. You don't have the 13 bottom. So, but the D wave is telling you, hey, pay attention. Let's just look at XRP while we're here. So XRP on a 4-hour chart. Okay, government loses, XRP goes up. Everyone celebrates relative outperformance. XRP goes down. The range at 36 cents, you're probably going to have a 9 bottom on the 4-hour chart. Okay, the D wave. Okay, this could be wave 1 up, wave 2 down, wave 3 up coming next. Okay. In other words, difficult to tell. Let's put the sequential back on it again. There's a lot of support down here. You know, buying XRP at 36 cents paid before. Okay, Driftless is looking at total 3 and total 2. Okay, so if we're going to a 4-hour chart, okay, so this is total crypto market cap without Bitcoin. $500 billion at 62% holding. In other words, who would buy today? Nobody. Nobody. Now, I can't tell you what to do. You just read the chart, right? Total 3, good call, Driftless. 62% retracement, 131 billion. As we'll do total while we're here to see if that's holding too. Total crypto market cap on the number at 872 billion, 62% retracement. Good job, Driftless. The 3 most bullish charts of today. 2008 is back. It's the big short. Great. That's what they built crypto for. That's what they built crypto for. Okay, let's sum this up. Nothing ever trades good at a top. I mean, nothing ever trades bad at a top, and nothing ever trades good at a bottom. There is no way the government can maintain the FUD flow that they had this week. There is no way. So whatever FUD they had, they threw it at the market. It's still holding, relatively speaking. If there is forced selling related to a bankruptcy or a reorganization, or if some big bank gets in trouble because the small banks are in trouble, obviously there can be a lot of selling that occurs. However, if you're in the crypto space, gold first, wait for that dollar drop, and then those Fed catalysts, the inflation number and that Fed meeting, it is Katie bar the door if the Fed admits, gee, we blew up the system. Now, in fact, I don't think Powell's going to be unhappy about blowing up the system unless it gets out of control. And if it does get out of control, it's going to be because they blew up the federal government and the dollar. Gold, Bitcoin, Ethereum. 2 weeks ago, 3 weeks ago, I was out. 4 days ago, 5 days ago, I was get to the chopper. Now it's think about getting in and deploying capital, because the legacy of the Gann research on the solar eclipse is that there are big, big money-making trends that can come out of these situations. We want to be on those trends. Some people think it's down in equities. I don't want to be disrespectful, but I disagree. The down move is in the dollar. The up move is in gold. And we hope crypto joins in. That's the market update for this week. Be smart, be safe. See you Monday.